Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis view for Coca-Cola stock over the short term. First of all, we should zoom out a little bit to check the major trend over the long term. And we can see easily that the trend is up over the long term, and the stock now is testing the channel line, and in general testing the channel line means a possible corrective wave, as we see in this case. For example, a corrective wave was created targeting the trend line. Here was another corrective wave, but it did not reach the trend line, and we are now testing the channel line once more. So whenever you test the channel line, there is a possible scenario of correction. This correction may be a type of consolidation. It may be a type of downward corrective wave targeting the nearest support. In our case here, I think the nearest support may be the trend line and the horizontal monthly support. So keep this in mind, that Coca-Cola in general is in an uptrend over the long term, but signs of weakness started to appear around the channel line, indicating that a corrective wave is on the way. First of all, over the medium term, we can see this impulsive wave over the medium term has ended, and the signal that caused the end of this impulsive wave is the double top reversal pattern on the daily chart, and you can see it very clearly. It broke below the neckline, and the neckline was at $63 approximately, and the break was with full seller's control, a large black candle with tiny shadows. So it indicated a severe selling pressure, and sellers were in control. In addition to this scenario that took place, this bearish scenario, we can notice that over the daily chart there is a significant exceptional volume that was also on a falling day. Here it goes. So sometimes the stock suffers from exceptional volume on falling days, other times it suffers from selling pressure and sellers are in full control. I think if Coca-Cola managed to resume any move to the upside, it will face a lot of selling pressure once more at almost the same levels. First of all, the channel line over the long term, and plus the upper limit of the double top reversal pattern. So this area will form a resistance zone ranging from $66 up to $67, which means that the resistance thickness is around $1 thickness. Keep in mind, there is potential bearish environment around this area, and the selling pressure may appear at any moment, at any day, and maybe Coca-Cola cannot even manage to correct or to resume the move to the upside. What's most probable to take place is continuation of the correction. The continuation may form a type of consolidation, but I think it may target the monthly support and the uptrend weekly major uptrend line. So it is also targeting a support zone around $1.50. At that area, we may start looking again at Coca-Cola and waiting for a signal to buy in a virtual trade, going up with the trend, going long with Coca-Cola when it gives us signs that the correction is over. And we think that the correction can be over around this area, ranging from the weekly support around 57.50 up to the monthly support around 58.65. This is the area where we think the correction may end. Of course, this will take a lot of time. I think not less than a month, maybe more. That's why you need to have a lot of patience, because the correction in Coca-Cola will not end within a week or two. The other scenario to do some virtual trading to the upside by going long is sudden and unexpected move to the upside, breaking all these resistances and closing above $67 for 2 or 3 days with exceptional high volume. This is the second case where you can go long on a virtual trade, targeting maybe $70 or more over the short term, targeting $75 over the medium term. So only two possible scenarios to do some virtual trading by buying Coca-Cola. One of them is testing the support zone around $57, maybe $58. That's our first scenario. The second unexpected scenario is to break the resistance zones ranging from 66 to 67. Otherwise, do not do any counter trend trading, because it may cause a lot of losses. Even if you are virtual trading, do not input in your mind bad systems that may later on cause some disasters for you. If you took these ideas into real trading, it will cost you a lot of losses. So keep in mind, your strategy is buying strategy, and your timing is only at two places, either testing 58 or breaking above 67. No third option, at least until now. And don't try to catch the corrective wave to the downside to make some money, even if it's virtual, because this is a very bad habit to go against the trend, even if the corrective wave may last for a month or more. At least do not do that until you make some profits, and then when you want to go counter trend, you are risking some of your profits, not at your first trades. Okay, you got the idea. That's it for Coca-Cola. We will keep it under the microscope for the near future, and when it gives any signal in the near future, we will be back again for the stock at the first virtual trade sign. Thanks a lot. Please feel free to subscribe, like, and share, and see you soon.